Hi everyone, in this video I'll show you how accountants record and depreciate fixed assets in QuickBooks, just like you'll do in a real accounting role. Let's get started. Before you record any transactions, you need the right account set up. So you go to Settings, Chart of Accounts, New, and the first one is going to be Accumulated Depreciation, and the type is going to be Fixed Assets. And this is going to be a sub-account of computers. The next account that we're going to need for this video is going to be loss on disposal. The account type is going to be other expense. And the detail type is going to be other miscellaneous. Save. We're going to record the purchase. So we're going to go to New, the expense, put in the payee name, and we can choose a checking account. And the date is going to be 1012023. That's on the Excel schedule. And the category is going to be computer and equipment. And the amount is going to be 3,000. Save and close. So here is the depreciation Excel schedule. And earlier we had recorded the purchase of the equipment for 3,000 in QuickBooks. So here is the calculation. The salvage value was 0, and we used a straight line method of depreciation, and the useful life is 60 months. So basically, the monthly depreciation has been calculated by taking the cost and subtracting the salvage value and dividing that by 60 months. So that's how you get the 50, and it's going to be the same every month. So we get the net book value of 2,950 by taking the cost of 3,000 and subtracting the $50 of the monthly depreciation. So that's how we got this. And then each month is going to be the same pattern. So it's again going to be the previous net book value less the monthly depreciation, and that's how you get the 2,900, and it's going to be the same every month. So the first journal entry is going to be recorded in QuickBooks to record the monthly depreciation. In order to record the monthly depreciation, we're going to go to New and Journal Entry. The date is going to be the end of each month from the schedule. So it's going to be the 31st of January of 2023. And we're going to take depreciation expense for $50, and we're going to debit it, and we're going to credit accumulated depreciation. And save and close. So after 48 months, the business decides to dispose of the asset. So the accumulated depreciation is going to be 2,400. The net book value is going to be 600, which is going to be the 3,000 that it was purchased at, less the 2,400 accumulated depreciation, and the sales proceeds are going to be 500, and the loss on disposal is going to be 100, which is going to be the 600 minus 500. So we're going to create a journal entry to record this disposal. So go to new journal entry, and the date is going to be the date of the disposal. So that is 12/31/2026. And the account is going to be cash or bank. So this is going to be a debit of 500 because that's what we receive. Then the next debit is going to be accumulated depreciation. And this is going to be for 2,400 as we saw in the schedule. The next debit is going to be the loss account, and that's going to be for 100. And then the credit is going to be in the fixed asset account. And save. Once the asset is disposed, you stop recording depreciation. For the following months, it's just going to be recorded as asset disposed. And so you've now seen how to set up fixed asset accounts, record purchases, post 5-year depreciation, and handle early disposal in QuickBooks. If this was helpful, please like, subscribe, and drop any questions in the comments. Thank you.